Let me see here. Let me see here. Let me see here. Okay, so it looks like we're all ready. Um, uh, uh, uh. Give me 1 second. Perfect. So today we're going to talk HELOCs briefly. What can I tell you about HELOCs? So HELOCs, as many of you that have looked, searched it up, HELOCs is basically when you have equity in your home, in your property. And what's happening is that instead of doing a refinancement where you're going to go ahead and readjust everything, the original loan amount, and now you're going to basically redo all of the interest rates and the terms, the years, what you're going to do with the HELOC is you're only going to be paying interest on the amount you're withdrawing. For example, let's say many of you might actually have the opportunity to get a HELOC right now of 100,000. We're going to use 100,000 as the example. So why 100,000? Because what we've seen is that many of you over the last 2-3 years, you guys have made, have built some equity in these homes because just the market of what's happened, right? Prices went up right after the pandemic. What we noticed is that people absolutely valued what a home is way more during the pandemic, which was the opposite of what people thought was going to happen. We thought that the market's going to go down, prices are going to go down, and really what ended up happening is we all really saw how valuable it is to have a home, our little sanctuary, whether it's a small home, bigger home, a condo, but your home. And really what we also saw is that homeowners, even if you owe or you have a mortgage, many of you were able to get something called forbearance. So you guys got 3 months, 6 months, even up to a year of kind of payments that were kind of frozen where you didn't have to make that payment if you ended up losing your job or having just an absence in work for whatever reason. There was a break for all of you who were homeowners, right? There was breaks for renters in certain cities in the United States, but it wasn't the same as being a homeowner. So being a homeowner truly, truly is where all the gain is at. There's just a lot of opportunity for homeowners. Even in hard times, they're the ones that get a lot of help and support. So during the pandemic, home prices shot up, they went up, the market went crazy, and so that means that many of you guys have equity. That's why we're saying, hey, we know that a lot of you probably have 100,000 in equity where you're able to do a HELOC. And what a HELOC would do is say, okay, hey, you have available to you $100,000. Depending on what amount you need, you can withdraw and you can use that money however you please. And what we're saying is use that money wisely. Use that money to reinvest it in more, assets, in another real estate, in another property. Use that money to grow your wealth, not to go and buy more toys, not to go and, go on that lavish vacation, but use it wisely to grow your wealth. And so let's talk about 100,000. Today we're going to use that as an example, and I'm going to basically show you examples of things you can do with 100,000 that hopefully will open up your mind to more opportunities, but also really will help you and kind of guide you and maybe those in the direction of just building more wealth through real estate. So $100,000, I'm going to show you really quick what that would look like in a HELOC type of setup. And this, my friends, you can pretty much get you can go to calculator.com. I'm not getting any sort of, money from calculator.com to advertise them, but it was just a simple tool that I was able to find and I wanted to show you guys. So you guys can do this and do it with really any number. What's going to happen here is you guys are going to see where it's 100,000. HELOCs are usually going to be in terms of 25 years or 30 years, which is what we put here, 30 years. And they're really going to be around the interest rate that's in the market. So right now we're seeing 6.5%. And here the calculation is shown over here. And what we're looking at here, my friends, is that your monthly payment, including your interest payment and your principal, is going to be $632. So meaning if they opened up a HELOC line of credit for you of 100,000, you pull those $100,000 out, you're going to be paying $632 of interest and principal. And then technically speaking, that'll be paid off in 30 years. But many of you guys, what you'll do is you'll borrow it, then a couple of years later, you'll pay it down. There's all sorts of things that you can do with that. Many of you also will have the opportunity on that HELOC to only pay interest. So in this example, if you only pay interest, then the payment would go down about 80, $90. So instead of paying 632, you would be paying 541. But as you know, the principal's not being attacked, so you're going to have to do that on your own. Whenever you have that extra cash, then you can start paying down that balance. But basically, the HELOC is here. You have that approval. You have the green door to really start utilizing this money. The terms that we've seen for HELOCs, just again to give you an example of what's happening in the marketplace, is that many of these HELOCs will stay open for you to withdraw. Let's say you were approved for 100,000, you might be able to withdraw 20, this month, and then 6 months later you might be able to withdraw 60. Now you're at 80, so you're able to do that back and forth. It'll stay open for 10 years, and so it's exciting to be able to have this option, right? Again, if you say, you know what, I don't know if I want to do this, I don't know if I want to invest in more real estate, but you're telling me to do it, what risks do I have? And I'm telling you, you don't have a risk. Go get the HELOC, go get it open. And if you decide that you don't want to invest, then nothing happens. You don't pull the money out and you don't pay any interest. That's the best part, is you're not really forced to do anything. But guess what? What if 6 months down the line, there's an opportunity for you? Now you have the cash to go ahead and pull it out of that HELOC and really take an opportunity, for yourself, your family, and grow your wealth. So if you have those 100,000, let's talk about what you could do with those 100,000. Okay, there's one quick example, and I'm going to go off of really the market here in Vegas. I'm going to give you some examples of houses you can buy in that price point. I'm going to give you examples of things you can do. You can use those 100,000 and buy buy an investment. You can use those 100,000 and buy yourself another home to live in, right? You can decide to upgrade. You can decide to say, you know what, I've been living in this older house, it needs remodel, I'm going to invest a lot of money in it. But guess what? This house would be a great rental. What I can just do is upgrade and buy another house, maybe in a different area. Maybe the area you've wanted to buy in, the school district you wanted to be in, whatever the case may be. You want to upgrade, this is the time. And the market, my friends, in the next 12 to 24 months is going to be amazing for you to really go out there and make some investments happen. So I also want to quickly just invite everybody. I want to quickly invite everybody. If you're watching, we're completely live. So if you have any real estate questions, please do not hesitate to ask. I know that we're fairly new to the YouTube space, especially in creating content in English, but we're here. I have 17 years of experience, and I can tell you that we are able to help you from the first-time home buyer status all the way to being an investor where you're buying, a big in bulk, in wholesale world. You're buying commercial, you're buying multifamily units in the hundreds. So we have that experience because it's been 17 years, and so we've seen it all, we've done it all, and that's the reality of why we're able to kind of share all these different examples with you, because we've worked through it all. We've been able to coach our clients through it, and it's just been an amazing 17 years. There's never a boring day in real estate, and that's, I think, one of the things most of us real estate agents won't admit to it, but I think we like that every day you show up and there's a new challenge or possibly a new problem that you have to handle, and then you have to move past it and get the job done. And most importantly is one of the things that we do as real estate agents, we really help our clients really work on building something that's really amazing, which is build wealth through real estate, right? So going back to the 100,000, my friends, if you have those 100,000, they're approved, and you're saying, okay, what can I do with them? Now I'm going to give you this scenario where you can buy a house. You can buy a house for a investment, right? You can buy an investment, 20% down. You can buy a duplex. You can buy a triplex with 20% down. We're using 350 as an example because we want to show you the numbers. I want to show you the numbers. And so you're at 350. You're 20% down. What you're doing right here is you're getting an interest rate in the market approximately at 6.5, like we mentioned before. And so now what does that number look like? Here below, you're going to see that you're about $2,000 a month, $2,050. Again, property taxes are not exact because we're doing an estimate. Some of these properties have, here in Nevada, we have great taxes, so we might see that even drop. but you're at 2,049, right? At 350, putting 20% down. And I want to just quickly show you the calculator on what that 20% down would be. Let's see here. And so 350, my friends, let's see here. Let's see here. Okay. It looks like it wants to work now. Okay, 350, and we multiply it by 0.2, that's $70,000. So again, out of your 100,000, you are using $70,000 to purchase, let's say, this $350,000 property. It's going to be an investment, and it could be a house, it could be a duplex, it could be a triplex. I'm going to show you some of those examples right now. So this is a 350 property. Well, not even 350, it's a 335. It's a 3-bedroom, 3-bath, 2-story. I'm going to show you real quick some of the pictures here. And we're looking at rent easily on this beauty being around the 2,200. And then you'll get to see a picture. One of my favorite parts is you're going to get to see the yard, right? You have a balcony. Look at this beautiful backyard. So this is what a lot of the renters are looking for, right? They want a yard. They want this part that they don't get many times living in an apartment, right? So what am I saying with this is that we see the possibility of you being able to own this as an investment and easily being able to cover the mortgage, okay? Easily being able to cover the mortgage. You might even get a little bit of money extra every single month from the investment. But really, in this situation here, what we're doing is you're looking at the you're playing the long game, my friends. You're playing the long game in the sense of you're looking for that renter to pay down that mortgage, pay down that balance, and that's really where you're at. This property in many cases might even be able to be easily rented around 2,500 just because of all the amenities it does have, 2-car garage and all of these things. So you're here at 334, right? But let's just say that you want a duplex. And so here I'm looking at the market now, the duplex market, duplex, triplex, you're here at 300, 270, here's really where you're at. And some of these you're going to be able to collect $700, $900 to $1,000 per unit. So you're easily, and again, you're buying at a much lower price point. So what's going to end up happening is you're going to, on these duplexes, for example, you're going to be able to make some money rather than, for example, that single family home, right? So this is just an example. I'm not telling you to buy this one specifically. I'm just saying, look, this is what's there for 270. You have this other one for 300. You might say, you know what, I'm going to spend a little bit more. I'm going to go for 300. Now you have 2 units. Like I said, you're collecting rent, $800 to $1,000 on each unit. You're able to easily cover that mortgage, no problem. And then there's still money left over. So you then can decide, do I want the house? Do I want the house, or do I want the duplex or triplex? But you're putting a limit on yourself, is saying 350. I want something in the 350s. I'm willing to put 20% down. I'm willing to, because you have that from your HELOC. Then what's next? What's next is that you can also select and choose to go ahead and upgrade. You can go ahead and upgrade and say, you know what, I'm living in this house. It has equity. I've been here for a long time, for whatever the reason is, but I want something a little bit better, a little bit bigger, whatever the situation is. And what are we doing? Now you can actually go ahead and get a loan, conventional 3% down. So what we're doing here is you're doing 3% down, the same scenario, 350, 3% down. So we're going to go back and use the calculator really quickly. 350, 3% down, we're multiplying that, and now it's going to be 10,500, right? So again, even if you bought the 2 properties or the investment with 20% down and this house where you're upgrading for yourself, you're literally, how much was it going to be for the investment that you were buying? 70,000 plus the 10, you're at $80,000 right now. You still have a good $20,000, left for an additional thing that I'm going to suggest that, could be a possibility for you, could be something that you do, but we'll leave that for the end, but right here, you're at $80,000. Again, now you have possibly upgraded your home, or just you need something better, you need something closer to work. Not necessarily is it even an upgrade in a home, it's just the location maybe is what you're looking for. Whatever the case may be, you're able to do it. You have the HELOC, the cash that you pulled out, and now you're able to qualify for this loan. So what's happening here? The 3% down, here are the numbers for that. Here are the numbers. 2597, that's including taxes, insurance, and everything. And you're 3.5% down at 6.5% interest rate. Now, you might be saying, Nora, that payment is insane. I'm not going to pay that. Let me show you the house that you would possibly be able to buy. You might be able to buy something newer, again, depending on the area you're looking at. This here, Romance, this happens to be one of our listings, beautiful listings with one of our amazing sellers. So this is your beautiful home, but 385 approximately. Again, you're at 3 bedrooms, 2 baths. So we're here. But what do I want to share with you? Your payment on this beauty is, let's say, $2,500, and you say, you know what, that's too much, Nora. It's not. Yeah, but you're forgetting that you've left behind a home, and that home that you've left behind, it has equity, it has a low payment, which is one of the reasons you got a HELOC instead of a refinancement. And you know what you're doing is that renting out that property, renting out that home, maybe that your mortgage is $800-900, you're probably out there able to rent it for $2,000, $2,200, because really many of you now are sitting in homes where you're able to come in at least at the $2,000 mark in regards to rental. So basically what's going to happen is that house that maybe no longer fits your needs ends up being another investment property you leave behind. And that rent that you're collecting is literally making the payment of this new property, this beauty of a home that you now want, right? Again, it could be an upgrade in a home, but it also could be something where you're looking for a different area, different location, and that's really what you're going after. But you've left behind a property that it has equity, and now is actually giving you the money you need in order to make the difference on this one. So many of you, what we're seeing, you guys are going to pretty much be paying the same thing you're paying already every single month, but you're now living in a possibly better area, possibly better home, closer to where you want. And now you have 1, 2, 3 properties, because now you pulled those 100K out of that one property you had, and you're utilizing that money strategically with the bank's money as well to really help yourself build wealth through real estate. Now you have 3 assets, 3 properties that 2 of those properties, the renters are paying them off. You're paying off the one you're living in because you're making that mortgage payment, and you're at the end of the day possibly out of pocket the same amount that you are out of pocket right now with that house, that one house you have. So this is hopefully something that you guys are, if you guys have questions, please feel free to ask. I know that this is possibly something where many of you say, well, Nora, I don't, it sounds really good, but it's more difficult than what you're saying. I can tell you that, the reality ends up being that what we're seeing right now in the real estate market is that in the next 12 to 24 months, you're going to have a window of opportunity to really come in as an investor, even as a new investor, and help yourself to some great deals. Okay. And so that is important for you to know, right? You might not make the decision, which is okay. This video might be your first video about where you're listening to investments or whatever the case may be. You might want to get yourself more involved, more educated. You might want to get more videos before you actually make the determination. I get it. We've all been there. It's not easy to move and become an investor when you're really looking at everything, right? You're looking at your expenses. What are my responsibilities, right? Imagine having 3 mortgages now, right? I get it. It's normal, but I promise you, and I tell this to all new investors, promise you that once you do your first investment and then your second investment, those 2 investments, you're going to learn a lot about yourself, and you're going to learn a lot about real estate, and you're going to definitely get comfortable with the process. And I promise you that when you get to your 3rd investment or your 3rd property, you are going to have just a different type of demeanor. You're going to probably be a little bit more relaxed. You're probably going to understand the process a little bit more. And you're not going to be as tense, right? You're not going to have as much stress because you're going to start seeing that it all kind of makes sense. And it all truly does, my friends. In real estate, it's definitely for many of you in real estate, you guys are playing a short-term game, which is fine. Many of you guys are flipping properties or want to flip properties. That's awesome and that's great. And there's a lot of money in that, and there will be a lot of money in that in the next 12 to 24 months. But many of you guys are really looking at the long haul, long term, and that's truly where we build wealth in real estate. And so for me, the value of you having a couple of properties where the renters are coming in and really paying those off for you, that's valuable. And before you know it, 5 years pass, then 10 years. In the 10th year, you're going to start seeing that balance really go down. You're going to really truly feel the impact of your decisions in real estate. You're going to, gosh, I should have done it sooner. I wish I would have done it sooner. It becomes something where you're more comfortable and you begin to realize that real estate has a lot of opportunities for you. And I say this because, my friends, I started, my family started from the very bottom building. And when I say the very bottom, I mean the very, very bottom, nothing. And we learned, my parents early on, through, making minimum wage, through making, at that time, minimum wage was $5. They really decided to buy their first property, back in 1990. And that property they bought in 1990, my friends, became the property that helped them leverage and buy more assets, more properties around 1998, 1997. They bought their second property. Then they kept a couple years later, they bought another property. And I'm saying that it took them a long time because my dad is very, he likes to calculate the numbers really, really, really strong. He's very conservative because guess what? He worked outside here in Vegas. He worked very hard to earn those $5, those $7. So every time he got a raise, 25-cent raise, it was a big deal for us in our household. It was a big, big deal. And there was a period in time where my mom wasn't bringing in the second income to the household, so it wasn't easy. So he had to do a lot with that income he got every single month. And so he began to see that real estate he bought in 19 I think it was like 1993 he bought that property, and really we still own that property today. It's truly a joy for us to really have used real estate to help us build something that we knew nothing about, which was wealth. And to really be here sharing this type of information with you on YouTube is for me one of the best things I can do, and in a form really give back to you and really help you along your journey to really see how amazing real estate can really be for you and for those generations that are going to come after you. Because that's when real estate and the real estate decisions my father made, what he didn't realize was how impactful that was going to be. When I came to age, to come of age, and that I started looking at the world as an adult, and that he was able to help me leverage because he had already started really utilizing it. He wasn't the expert, but he was just comfortable enough to say, you don't want to be renting. You don't want to rent. Don't rent. So he'd always had that mentality with us, don't rent. So I always never thought of as an option to be a renter. And so what that ended up doing is really, it started my real estate journey. I can possibly share that story with you at a later time, but it is truly, real estate has been impactful for my family. For me, it has been impactful for the clients that I have served in the last 17 years, because we've helped them really see the opportunities that are there. Some of you have already come to us because you know the opportunity, but there are a lot of folks that came to us and really started with real estate and had no clue of all the opportunities that real estate had in store for them. And so it's been a true joy to learn how to communicate this message even more through Facebook, through YouTube. So I have great respect for you, and I have great respect for what real estate can do for you and for everyone. So that's why I'm here sharing. So going back to the topic of sharing a little bit about what is possible with your $100,000. We're going back to this property 380. So again, we're saying, look, this is a beautiful home. There's a backyard, and maybe you don't have that. So again, now that asset that maybe when you bought it, it wasn't the ideal property for you. It was like, gosh, I'm just going to buy something because that's what I approved for. Now that asset that maybe you've complained about because it's not that new, because it's not in the area you like, because it's for whatever reason, it hasn't been the home you dreamed of. But guess what? That asset has become a huge stepping stool. It has become a huge opportunity. It's a huge gift, really, and a huge blessing. So now you can pass that asset or that property and leave it as a great rental property, possibly, and you move on to something that may be nicer, whatever your criteria might be. So what we're saying here is that you've bought an investment, you can upgrade into a newer house possibly, and you can do it all within your budget, right? Then what happens after that is that we've spoken to many of you about even helping supporting your youth, possibly helping your, friends and things like that, or many of you, your children, right? And you say, okay, I want to help them out. Well, guess what? When we look at the calculator, you have equity line of credit for 100,000, you still have 19,500 left over. And what you can do with those 19,500 left over, you could help your child buy their first fourplex and help them with the down payment, the 3.5% down, right? That's pretty much what can many of you actually you have the opportunity of doing, right? Many of you might say, well, I can spend it in college. Yeah, absolutely. You can do a lot of things, but you can really help them and get started with the real estate game and do it right with the multifamily from day one. So I'm going to share briefly with you what the numbers would look like for a fourplex for somebody that's going to be utilizing it as a primary residence. And again, we're using information from Vegas because what we're doing here is we're saying, okay, fourplexes, 500,000, sounds right about right. But if you want to, but again, if you want to help them buy something that's less, maybe a duplex, maybe a triplex, something like that, great, you go down, but roughly around 500,000. And here what's going to happen is you say, okay, well, 3.5% down, which is what FHA requires you to put down on a fourplex, which is awesome news. And that's the reason why we say this is kind of an opportunity for them, because really you could only buy that first property FHA when it's that first property, because you are purchasing that property with the intention to live in the property minimum 12 months. So that's the reason why you're getting such a great opportunity to come in with so little money out of pocket. Excuse me, if you were considered an investor, the number would be let's just do the numbers. Let's do the calculation. 500,000, 3.5% down. You're at 1750, my friends. But let's say, what is the requirement of an investor when they want to buy a fourplex right now? Well, it's 25% down, my friends. So it would be $125,000. It's a big difference, okay? A big difference. So that first fourplex that you can buy, that your that your son can buy, it's an excellent first decision to get into real estate. So, and when we talk about the money, we said, okay, 1750 plus the 8,500. You're right there underneath the 100,000. And why did I not include, many of you that might be looking at my video might say, oh my God, but she didn't include closing costs. I get it, my friends. I didn't include closing costs strategically because guess what? In this market, you should be able to get a real estate agent that represents you, that helps you negotiate those closing costs to be paid by the seller. So really your commitment to coming into this purchase is that down payment, and that's it. So if we're going back to the numbers, you're 500,000, 3.5% down, and here you have the numbers. And again, we like to be very, I could give you some really awesome, numbers and say, oh, it's going to be 2,000, 3,000, and I made up those numbers, right? But I'm going a little bit higher because I want to make sure that we take care of you and that instead of it being worse news when you go and do it, it's actually better news, right? Depending on the rate that you have. But here we went a little bit high on the numbers, but you're at 3,800 for a fourplex, 500,000. Some of you might say, well, that's a lot of money, Nora, and I hear you. And so what we're doing is I'm going to show you the opportunities that you would have right now under a 400 $500,000 opportunity. So here we have, let's say, and the one that I was looking at here before, my friends, is this one here. So let's see here. So this is Jeffrey. This is 504, if you are able to see that here. So you're at 504. Let's see here. There we go. So it's at 504, and what we saw with this property is the rentals, and the rental purchase, the rental amount that's being charged is $650, and this ends up being around $2,800 a month. That's lower than your payment. Many of you might say, well, it's actually, let's look at that estimate. It's actually $1,000 lower than your payment. I hear you. Now, the situation is that you have to look at the comparables in the rents. And what we found out here is that the comparables for the rent that's being charged with this fourplex, they're very low. So this property with the new owner that takes possession is due for a rent increase. Now, it's important to mention that you guys have to review those tenant contracts, because if the tenant contract is there for 2 years, 3 years, then you have to respect that rate. But if there's no contract, then you can come in and really reinforce market value rents. And so with this property, really rent should be a couple $100 higher than where they're at. So just in going in and raising the rent a couple $100 on each of the units, you would be very close to the 3,800 that you're going to be making. So again, this fourplex isn't going to be giving you residual every single month. It's not going to be giving you positive income every single month. It's not, because you're in it. Your child, your son, whoever you're strategically aligning this for. This is for the long game, right? You're playing the long game in real estate. So the long game is that those 4 renters, those 4 tenants pay down that balance over the next 30 years, right? And that's the game. So there's not going to be any income left over. And like you saw, there might be a little bit that's missing, but what's the idea here, and also why I like fourplexes or multifamilies a lot, is because you usually do not have all tenants leave at once, right? Unless there's times where you intentionally want that to happen and so you ask them to vacate, but very rarely do we see that. Most of the time what we see is that, okay, great, one tenant leaves, the other 3 are paying, so you're never left with the whole mortgage to be paid directly on your own. Usually you're going to have it covered with those 3 other tenants. The difference when it's a single family or a house, well, it's only one tenant. So when that tenant has to vacate or moves, usually you have 1 month that doesn't get covered. And so you're coming in with that mortgage that has to be paid, right? So the advantage of having multifamily is that you do have a little bit of leverage when it comes to the mortgage payment not being covered completely just by you, right? So the goal here is we've taken you tonight from your HELOC, technically speaking, $100,000 that you're going to be getting, where you're able to use those $100,000 to really put you in purchasing two more assets, and helping someone help buy a third one, right? So now you have a total of 3 properties, and you actually contributed to a fourth, right? Which via a gift, however that's what you did, and now you really contributed towards 4 real estate transactions in the next 12 to 24 months, where these assets they're going to be paid by tenants, right? And that's one of the things that I say all the time. I am so grateful for tenants, and I hope that many of them understand, truly the opportunity that they have in real estate. But some folks just don't want to hear it, right? Some folks just don't want to deal with the with the responsibilities of being a homeowner, property owner. And I get it. It's valid. If it was up to me, I would want everybody to own their own real estate, because it does so much. It is truly like I said, life changing, especially when it comes to your finances. You're able to build wealth. You're able to put that monthly money towards something, right? When you're renting, none of that exists. What you are doing is you're paying down someone else's debt, which is great if that's what renters are doing, and they're okay. Awesome. So what I'm saying to you is, now you have three properties that are yours, that those tenants, you have two sets of tenants that are helping you pay those down, and you upgraded your house. Maybe you're closer to what you wanted to be in, the location, whatever the case may be. So what I'm saying is, these HELOCs, or this equity that your homes have right now, that your properties have, truly come in and bring you, a lot of opportunity, my friend, a lot of opportunities. And for me, that's one of the things that you definitely need to look at. And the last part I want to mention about a HELOC, my friends, is the fact that if you get the HELOC tonight, if you say, you know what, I'm going to do this HELOC thing, I'm going to approve for it. Well, you don't have to pull the money all at once, number one, which means that you don't have to pay that, that interest payment, or that payment that you have to make. You don't have to pay it. You have the option to get it if you then feel comfortable, right? And so the best thing you can do is apply for it and not need it, rather than need it and then have to go do it quickly, and then it's too late. Now you have one of the best deals, a great opportunity, maybe the house that you wanted, and now it's gone, because now you have to go through the whole process of doing the HELOC and then another home loan. So the idea is, you want to be prepared. You want to be prepared. You want to do this stuff ahead of time. And I'm already telling you, there's going to be tremendous opportunity in the next coming months. So you do not want to wait last minute to really align all of this up, right? It's better to have it ready for you and not use it, than to see the opportunity and really just regret it. I wish that I really would have wanted that house. I would have upgraded to that house, no problem, given this amount of money, and left my house, right, to be rented. So you want that opportunity, and you want to be prepared for it. So also, I want to just briefly give you guys a quick I want to give you guys a quick tour of, we have another YouTube channel. For those of you that are seeing us in YouTube, those of you that are on Facebook, we have a couple of pages, one dedicated to Spanish, one dedicated to English. And this one specifically, my friends, is dedicated to Spanish information, Spanish content. And as you probably will see, we have a lot of videos with that Spanish channel. So if you guys have family, friends that prefer to listen to this information in Spanish, well, we have a much bigger channel in Spanish. And truthfully, we did that because we thought that a lot of the information needed to be translated, right? Some of this information is not easily accessible in the Spanish language. So we went forward and started really building that out and giving that information in Spanish language. What happens now is that we realize that many of you are really looking for more detailed information, even in English. So we're here for that. We're going to be creating a lot more videos. We're going to be sharing a lot more information. Be patient with me. Please let me know how I can serve you. Let me know what questions you have, what concerns in real estate you have, what would be useful for you, what knowledge would be awesome for you to have. And I can absolutely dig deeper and really go in depth in the way that I'm explaining the information, right? Again, all of this information is, my professional advice, my professional experience, because I have over 17 years of being in the real estate world. And whether it's first time home buyer, VA loans, or investments, small investors, large investors, we're in it, and we're doing it real time, right, with our clients and for ourselves as well. And that's the reason why we're so well versed in all these different types of niches, really, because they're all different types of niches. So what we want to do is we want to bring the information that you need today. So please let us know. You can do that by commenting on the message, by sending us any sort of question. We'll go ahead and create content and videos around that for you so that you guys can get all the details that you are looking for. So it is my pleasure to give you guys the information on HELOCs. Again, if you have any more questions, any more concerns about what the opportunities are here, let me know. But again, real estate is going to be a tremendous, tremendous vehicle to building wealth for you. Especially in these coming years, many people in the real estate space are saying, you know what? I think that many of us had thought, hey, the opportunity to build great assets or great investments in real estate, we think that time has passed. But now that we're seeing what's happening with the market, we're seeing this opportunity come up again. So those of you that are here that are listening and really have been thinking about getting into the investment side, do not hesitate. Prepare yourself because there's going to be a lot of opportunities coming for you. And I want to end with the last part, which is, I tell folks this all the time. There are two things that I believe, truly, truly believe in, and I'm passionate about. One is investing in yourself, your knowledge, your mindset, your skills, and two, investing in real estate. And when you combine those two, and for you here tonight, if you've been with me in the video or you're learning about real estate, you're learning about self-development, mindset. If you're combining those two, gosh, there's nothing that can stop you. There's a bright, bright future ahead for you, and that's truly what I wanted to share is keep moving forward, keep looking for that information, get those tools you need, and ask a lot of questions. I'm here to serve you. You have a wonderful night. Thank you very much.